In this video, we're going over how I know when to close my credit spread trades. I'm going to break this down into 4 simple and easy to follow steps. 1 is based on profit, 2 is based on time left, 3 is based on trend, and then the 4 is the handbook guide that I'll walk you through. Again, guys, this is everything you need to know when to close your credit spread trades, either for a loss, for a profit, knowing what to do and when to do it, so you're no longer scared in the trade and second guessing yourself. So let's dive right into it. Number 1 is profit, okay? How do I know how much profit to take on the trade? Well, this comes down to a simple rule. I always try to close my trade when the spread starts trading for 5 cents or less. Why? Well, because if I have time left, let's say I have more than 5 days left in this trade, so let's say 5 DTE plus. So if I have 5 days or more left, and the credit spread is currently trading at 5 cents, then that means that I've kind of squeezed out the max profit that I can from this trade. Like what happened is, when this trade was trading, it started trending in our favor, the stock started moving in our favor, the option or credit spread started dropping in price, and now we collected most of it. An option spread typically won't go down below 2 cents, whatever, or at least you won't be able to collect it at that amount, just because of the idea of intrinsic and extrinsic value that comes with time. And so if you can sell a credit spread or close out the trade for 5 cents or less, 5 cents, 4 cents, 3 cents, that is the best trade. Why? Well, because there's still time left in the trade, so now you're able to collect a bulk of the profit, roll that profit you made into the next trade and continue on, and instead of having to wait those extra days just trying to collect a few pennies instead of collecting that money and moving on. So that is the profit category. The time category. If I am trading a credit spread, my time that I go into the trade with, the idea that I'm going to hold until expiration. So every time I put on a trade, my idea is that I'm going to hold this stock until expiration. You're like, why would you do that? Well, because that is the strategy I use to maintain the 95% win rate that I have. My strategy historically dictates that I hold until expiration. Now again, if we're starting to get closer into a certain time frame where the market starts reversing and trending and other things that we'll talk about here in a second, like trend in the handbook, then again, I can exit early. But in a consistency of time, I only exit at the expiration date unless the profit category is hit. Okay. Here is an example of why I would exit a trade early, whether for a loss or for a profit, is trend. When the market is trending up, I trade put credit spreads. Why? Well, because put credit spreads make money in general as the market goes up or stays flat. When the market's trending down, I trade call credit spreads. Why? Because call credit spreads make money on the way down or when the market stays flat. And because of this is my idea, my thesis when I put on a trade. Okay, the market's bullish, put on a put credit spread. Okay, the market's bearish, put on a call credit spread. When that thesis changes, I'm allowed to exit. So for instance, if we're in an uptrend and it starts reversing going downtrend, then I can exit and cut my losses. If it's trending, it bounces and starts coming up higher, I can exit and take my losses instead of taking the full max loss. Now the question is, how do I know when it's reversed or if I'm getting scared based on my emotion? Well, it's simply this. I need to have a proven, systematic way to measure the trend. Right? So that I know when it's trending up, I know when it's trending down. And so I can also measure when that changes. I use my trending band indicator for that, which is for free. I give to all my Inner Circle members. But again, essentially what it is let's just go very basic. It's not this, but anybody can do this one, is a 200-day moving average line. Simply add that to your chart. If it's still above that line, you're still in a bull market. No need to adjust it. If it breaks through that line, then now the trend's changing and you can exit early based on that criteria. Last but not least is the trading handbook. I outline all my rules, the profit one, the time one, the trend one, all that and so much more is laid out in the trading handbook, which you can get for free when you click the description down below. You simply just provide your email and you get access to this trading app, which includes every single strategy that I built, the exit rules, the entry rules, the sizing rules, how much credit to collect, everything you need to become an expert credit spread trader for free. I'm giving it all away to you. Just click down in the description below and check out the handbook, and it'll walk you through every single one of these as well. But anyways, if you want to know how to close your credit spread trade, you should look at the profit, you should look at time, and you should look at trend. All right, guys, thank you so much for watching this video. Smash that thumbs up video if you learned something. Smash that subscribe video if you want to become a better credit spreads trader, because I post videos on how to become a more profitable and consistent credit spread trader every single day. So anyways, I hope to see you guys in the next video. Thank you for watching. I'm Austin, your host, and I'll see you in the next video.